Welcome to another episode of The Last Investor. In today's video, I'm going to go through my Trading 212 account and show you what's happened to my portfolio over the last couple of weeks, and I guess more importantly, what's happened in the last couple of days, because that has had a major impact on my portfolio, but I suspect on most people's portfolios as well. So I'm going to talk about that. I'll talk a little bit about the economy as well, and what is really going on and what we can expect to look out for in the future going forward. So before I dive into the portfolio, I really just want to touch on the economy very quickly. So if I go here to market beat, you can see here this heat map which shows you what's been happening in the economy so far in the stock market. So you can see technology is pretty much a sea of red as far as the technology sector is concerned, pretty much red all the way through. Some worse than others. Microsoft is down over 3%, Google's down 1.28%, Facebook is down 2.2%, Verizon and AT&T seems to be doing well. When you look at the medical sector, it looks slightly better. Beverages looks really good, utilities looks really good, consumer discretion looks good. So really it's mostly tech. Now I just wanted to show you something else here as well very quickly. So when you look at the top gainers for the week, for today at least, some pharmaceuticals are there. You can also see some energy companies there which have done really well. So yeah, and in terms of companies that have done badly, it's a mixed bag as well, but mostly they've been the tech companies. Now, one other thing I wanted to show very quickly as well is the commodities. So right here down the commodities, you can see the oil in the last day alone, oil is up to $40 per barrel. It's 8% up, and it's the same for heat oil, and also natural gas seems to be down, which is unusual. But generally speaking, oil is up in energy. Look at metals down. Gold is down 5%. Silver slightly up. It was down earlier, but it's slightly down now. Palladium is also down, and also we have copper, which is down as well. So generally speaking, in terms of the energy sector, oil up, gold down, which is another pattern and usual story, and I'll touch upon that and why I think that is the case. And just finally, the last thing I wanted to touch on really is, basically I wanted to talk about the 10-year Treasury rates. So as you can see, just to give a very quick overview, the higher the yield is, that just basically means that people are not really interested in buying treasuries. The lower the yield, it means that demand for treasuries are really high, and that means the yield is going down. And what would cause that to happen? Well, the usual thing that would cause that to happen would be people are usually rush into the bond market and buy yields because they think it's the safest form of investment. So if they think that the economy is very bad and things are going to be really bad, or the future is very uncertain, then people will rush into the bond market, and that will push the yields down. The higher the yield, then that basically means that people aren't really interested in going into the bond market. But the lower the yield, that means a lot of people are rushing into the bond market. A lot of investors are rushing into the bond market, which drives the yield down, and they feel that it's a safe haven. That's why they're going into it. So if you look at towards the beginning of 2020 here, you can see that the yields really dipped, which means that because of the uncertainties in the market, people are rushing into the bond market. Right from the beginning, let's just look at the month by month here. So as you can see, from January, yields went from 1.76 and it dropped all the way to about 6.5, 6.2, sorry, 1.76 all the way to 0.62%. And it's just gradually, from July, it's just been gradually rising. As you can see right now, you've seen a big jump from 0.83 at the beginning of November to 0.98 today. So that it's probably just about to dip into or go into into the 1% range, which is significant. And the reason for that is because Pfizer have just announced that they have come up with the potential vaccine candidate, which is shown to be very effective, almost like a 90% effective rate. So people who have been investing in work from home stocks have now decided that now is the time to go back into traditional stocks, such as and into traditional commodities and investments such as oil, your airplanes, and even companies like Carnival Corp have seen a massive increase in their share prices. People rushing back into it because they feel that now that we've got a vaccine, a potential vaccine candidate, that things are going to get back to normal anytime soon. So that's what's happening. So hopefully that gives you a little bit of context. And sorry for that being a little bit long, but I just thought that it's important to have a bit of perspective as to what's making stocks happen the way they are. So as you can see, my portfolio has taken a bit of a hit. It's important to understand what that is. Now, as you all may know, and people who've seen my previous video would appreciate that I've actually put my stocks into 4 different categories. Basically, I've set up like effectively what I like to call them ETFs. So my own ETF, where I've set up an ETF and I've purchased different types of stocks and placed them in each of those categories, or pies should I say, as well. So the gold pie, which is mainly constitutes of gold stocks, you can see gold is really down and gold has been hit really hard. So most of the gold mining stocks are really down. Sentiment is really down, and so is Greatland Gold. So is Green Coat, and even renewable energy stocks are slightly down as well. As you can see, the Nasdaq is down as well on the whole, 0.51%. But the S&P 500 is a mixed bag, actually slightly up 2%. But that's probably because there are a number of other companies, non-tech stocks in the S&P 500 that's probably keeping that up really. So that's where that is. That's why that's down at the moment. Now, when I look at the tech as well, you can see tech is down quite a lot. Tesla's down 6%, Microsoft down 2%, Amazon 5%, Apple 5%. I mean, this in terms of my portfolio, not necessarily how much is down by today, but in terms of my portfolio. So, I mean, a lot of stocks are in the red here. And then when I look at my dividend reinvestment plan stocks, you can see the usual ones are slightly down, but you can see the other ones with the traditional type stocks are up. Pfizer, of course, is the one that made the announcement. It's up. So the traditional stocks you can see are all up really. So this really also shows the benefit of having a diversified portfolio, which looks at different types of stocks. So that's really important, and that would help balance your portfolio by doing it that way. Now the genomics stocks are also up, which is interesting, but obviously these are all medical based stocks as well, biotechs. Invitae I think was actually slightly down, but I've been up a lot on that particular stock. CRISPR slightly up. So yeah, a few stocks still in the green there. So that's kept my portfolio relatively in the green on the whole. As you can see, I'm only down 0.8% overall. But if I, for example, had just all gold stocks, then that would have been down significantly. Or if I had just all tech stocks, then that would have been down a lot as well. As you can see, I mean, all gold is really taking a significant hit, a 6% down. So yeah, there you go. That's my portfolio. Just a lesson really in trying to keep a diversified portfolio, because you don't know how these things will pan out. I mean, my personal take is that I still believe in stocks which have a disruptive element to them, stocks which are going to be the future. I'm still a big believer in those sorts of stocks. So I have no doubt that this is going to do well. Teslas of this world are going to do well. Amazons and Apples, the FANG stocks are going to do well. The up and comers like Fastly and Slack are going to do well. And Square, I have 100% belief in them. Unity, they're all going to do well in my view. So I have no problems with them at all, keeping them in my portfolio going forward. So, and as you can see, I've added IPOB into my, which is Open Door. That's I call it the new Zillow. Um, so yeah, that's another one's going to be on. So Twilio is another company that I really love. I think that's another future stock that's going to do really well going forward. So these stocks, in my view, yes, they're taking a battering today because of investor sentiment, the general investor sentiment. But in the long run, as I said, this is not a race, or this is not a sprint, it's a marathon. So the sprint at the moment is in favor of, non-work from home stocks, the go to work stocks, if you want to call it that. So it's favoring the go to work stocks, but at the moment, but in the long run, I still think that those big tech, not necessarily big tech stocks, but the tech stocks and the stocks which are going to disrupt the future, those are the stocks that I'm going to remain 100% invested in going forward. As you can see, that's where most of my regular payments goes into, and that's going to remain the case. So yeah, that's the updates for this week. Hope you've enjoyed that. Of course, like, comment, subscribe. Peace.